Saber rattling over the Trump tariffs. That's the subject of this week's Fastest 4 Minutes in Finance. Hello and thanks for joining us for this week's segment. I'm Scott Inman. Well, last week we talked about some of the stocks that were leading out in the S&P 500 and the companies that were being left behind relative to the index performance. And we ended that segment promising to discuss further this week. Well, we're going to postpone that by 1 week because there was some news this week that sunk stocks temporarily and turned lots of political ideologues into economists overnight. So we want to provide some insight. Last weekend, President Trump unveiled a new set of tariffs targeting imported goods from Canada, Mexico, and China. The president's plan included a 25% tariff on goods coming from Canada and Mexico, with the exception of Canadian fuel imports, which would be taxed at a 10% tariff. Trump announced a 10% tariff on China, and those tariffs were expected to take effect Tuesday. But Trump delayed the tariffs on Mexico and Canada by 30 days after talks with those countries' presidents. Meantime, the Chinese tariff went into effect, and China retaliated with a 10% new tariff of its own on about 80 U.S. products. Now, this action seemed to surprise the stock market, even though Trump has been threatening tariffs since he began his presidential campaign. The tech-heavy NASDAQ plummeted more than 2% on Monday, but had recaptured much of that at the time of this recording. Well, our partners at LPL Research believe markets had priced in some relief from tariff risk after the inauguration, and that may have been a reason for the initial pullback. Investors, though, should buckle their seatbelts for more volatility, as President Trump has recently signaled he might expand tariffs to include specific categories of goods like semiconductors, pharmaceuticals, and steel. He's also hinted at tariffs on European imports. Now, how the market perceives the impact of tariffs will drive short-term volatility. The actual impact of those tariffs on the economy is a long-term question. Many economists anticipate that businesses would pass the full cost of tariffs on to consumers. If businesses expect additional tariffs in the future, they might even raise prices by more than the initial tariff. On the other hand, consumers have a say here. If they resist higher prices, it could force businesses to absorb part of the tariff burden, especially if there is a U.S. alternative. Of course, if consumers pivot to American-made goods in mass, that could put demand pressure on domestic pricing as well. And another piece to the puzzle is what is done with the revenue from the tariffs, how it is deployed, and what, if any, effects it has on other taxes consumers pay or productivity might provide some balance. The bottom line is any definitive impact tariffs will have on the economy is too uncertain right now. And any definitive opinions about it may be politically motivated from either side. It's also still likely all the tariff threat is being used by Trump to negotiate diplomatic wins. And the final tariff, if any, could be smaller and could be temporary. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.